Hello and good day. This is the daily analysis. The EURUSD symbol on February 18th. After an aggressive move towards the sell-side liquidity and its collection, the price finally reacted to the proximal line of the order block boundary. This is our forecast for the rest of the day. The price may have a short-term bearish correction and eventually be accompanied by a bullish trend. The overall outlook for the currency pair, EURUSD, musically speaking, is currently positive and could continue its trend up to the 1.20 range and move higher. And the bearish outlook, a lack of activity in the market, is one of the main factors causing the euro to weaken, along with the impact of the pound on the euro market. With the weakening of GBP's strength, the euro's strength has also decreased, and we can see that yesterday's candlestick formed a pin bar, but from a price action perspective, the price movement, we can see that in recent days, it hasn't managed to close below the swing point, and it has only moved downward. It reacted to the daily bullish order block area and then returned inside again. A candlestick closed, which is bullish. There is a positive outlook in the market, and the price could move upward according to the time frame analysis. The 4-hour chart of the EUR-USD pair. The price movement. We can see that it was expected to have a short-term correction. After liquidity was collected towards the sell side, it was expected to move upward again, but we see that it faced selling pressure. And ultimately, it entered a 4-hour fair value gap area, which is one of the factors causing the euro's price to drop. The news was related to the release of GBP data, which was released much lower and weaker than expected, causing a sharp drop in the euro. It experienced this drop, and after that we can see that it has recovered all of this decline and moved upward again, breaking a key level at 1.1846. We are watching this unfold. It is possible that the price will have a short-term slide downward, and if selling pressure increases, it could enter a limited rejection block. If a lower sell forms and a downward trend is identified, we can use this opportunity to enter a buy position, which forms our second trading strategy, and we can place the stop loss behind the swing or behind the FVG, fair value gap zone. Set it with the target at the swing high and the liquidity on the buy side, and we must definitely keep in mind that the price usually moves toward liquidity, and liquidity attracts the price toward itself, so the price movement downward is toward the sell side liquidity, and it collected the external liquidity. It reacted to an internal zone, and it is anticipated that it might move upward again, which is a liquidity pool zone. Here we can observe this, and after collecting all the liquidity, it can enter the zone of BPR, which is the overlap of the FVG and imbalanced zones within the market. It can enter, so we can set our target on the BPR zone. With the analysis of the 1-hour time frame of the EUR-USD pair, we can see the price movement, and my prediction is that it will react to the order block zone, but after that we see that it was accompanied by more selling pressure and eventually entered the FVG zone. It entered the 4-hour zone, which is an optimized 1-hour zone, and then made an aggressive move upward. A correction that we expect for the price, and it was limited to the shadow area on the order block zone. This is on the 1-hour time frame where the price can enter. If this order block zone is reached and we identify a change of character or a CHoCH, we can enter a buy position and use this opportunity to enter a trade. We can use this analysis on the 15-minute time frame for the symbol. For EURUSD, using the ICT kill zone indicator from TIFF Lab, we can identify the kill zone areas and trading sessions. We can identify that the price movement during the New York session moved downward, and after that, it entered a bullish phase, and during the Asian session, it performed an accumulation move. If, in another scenario, the London session moves downward and enters the POI zone, and we identify a market structure shift in the lower structure and then in the higher time frame structure as well. This serves as a confirmation of the end of the bearish trend and the beginning of a bullish trend, and we can use this opportunity to enter a position. Also, by analyzing the price action, we can see that in this area there was an accumulation phase. During the New York session, the price moved downward. Then again, it swept the sell-side liquidity, which was considered a manipulation move. And finally, it moved upward, which marked the beginning of a distribution move. This suggests that the price might move downward toward the origin of the move. Then, after its upward move retraces, it may once again continue its bullish momentum, wishing you success and profits.